Hey, what's up everybody? In this video, I want to talk about a lot of financial news that came out this week. We're going to talk about Bitcoin, the housing market, inflation news, and a couple of other things. You will not want to miss this one. If you're new to the channel, my name is Dan. I do a lot of investing videos on the channel. So if you like investing, hit that subscribe button so you can see more videos like this one. Alright, let's get started. Alright guys, the first piece of news is that Tesla has stopped accepting Bitcoin as payments for their cars. Now if we scroll down, we have a tweet from Elon Musk. He says cryptocurrency is a good idea on many levels. We believe it has a promising future, but this cannot come at a great cost to the environment. We are concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions. So my question is, does anyone believe Elon Musk here? I mean, if you look at last week's Bitcoin price action, we have a huge dip in one day here, dropping down to about 46,000 at one point. That is about the same time he announced they're not going to accept Bitcoin as a payment anymore. So I have a hard time believing it has anything to do with the environment. I feel like that's just a reason a lot of people give for a lot of things these days. It certainly makes him sound good. But the real reason is that Bitcoin has shown a lot of volatility, and so that really reduces its value as a medium of exchange, as a currency. The next piece of news we have is about housing. So if you've been looking for a house, you probably already know what's going on. But for those of you that haven't, here is year-over-year increases or decreases in home prices. As you can see here, back 2005, 2006, homes were appreciating over 10% per year. And that led to the crash where home prices decreased down there in 2008, 2009. Since then, the market has come back, but we're starting to enter bubble territory very clearly here. Year over year home sales, the prices have gone up over 15% nationwide. Now, given the number of people who are out of work, it is kind of puzzling as to why home prices keep rising. But one reason they may not know about is that the Federal Reserve is buying billions of mortgage-backed securities every month.
Billions and 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 billions.
Now, why are they doing this? Jay Powell was asked this very question. Here's his answer. And it says, yeah, we started buying MBS, mortgage-backed securities, because the mortgage-backed security market was really experiencing dysfunction. We've sort of articulated, what our exit path is from that. It's not meant to provide direct assistance to the housing market. That was never the intent. It's really just to keep that as it is. It's a very close relation to the treasury market. And he goes on here, but nowhere in his answer does he actually touch on any real reason why they would be buying mortgage-backed securities. Here is another factor. You may have heard about the eviction moratorium. You may have heard a federal judge has tossed it out, saying that it's unconstitutional. The CDC does not have the authority to be doing this. Well, that case has been appealed, and while the appeal process is going on, they have decided to keep this moratorium in place. I find it very interesting. I think you have to watch what people do rather than listen to what they say. And based on what the federal government is doing, they hate the middle class. They're destroying it. I am part of the millennial generation. I am looking to buy a house. Right now, it's very hard. The home prices keep going up because the Fed is supporting it. They're keeping home prices higher through their mortgage-backed security purchases. I have the time, I have the money, I might be interested in a fixer-upper, maybe a foreclosure. That is going to be hard to buy right now too with the eviction moratorium going on. So the Fed is really keeping the supply low, which keeps the prices up, which is really not helping middle class Americans. And the media really covers for the government, they cover for the Fed here. They really make the landlords out to be the rich guys. Don't have any pity for a landlord, they can afford it. The reality is a lot of middle class people are landlords. It's a lot of mom and pop operations. And much like the minimum wage hike they're trying to push here, this is another action that really hurts middle class Americans like landlords. But we might be about to see a big turn in the housing market. Let's have a look at the next chart. The Michigan Consumer Confidence Survey results just came out. They do this survey every quarter. What's very interesting right now, if you look at this chart here, is the sudden divergence of home builder sentiment and home buyer sentiment. The home building industry is very much a boom or bust industry, and when things are booming, when home prices keep rising, the home builders keep ramping up production. But they usually overshoot it. They usually don't know when to slow down. So this is an important chart to keep in mind if you're thinking about investing in home builders, or more importantly, if you're just thinking about whether it's the right time for you to buy a home. Now, I don't know what's going to happen, but this chart at least would indicate there's a good chance home prices might come down. The next big piece of news we have is a labor shortage combined with inflation, which is really setting the stage for stagflation reminiscent of the 1970s. Let's have a look at a few charts together and I can show you what I'm talking about here. First, we have Google Trends for the search term inflation. And as you can see, it's usually around a score of 50. Scores are anywhere from 0 to 100. It does fluctuate over time, but recently we really shot up over the 50 mark. We're getting to be around 60, so that's quite abnormal here. This chart goes back to 2004. It's never hit this high before. And Google Trends predicts that it will go upward up to 100. They have that dotted line there showing you where the direction is going. This is important because inflation is psychological. If everyone expects inflation, people will start charging more for their services, and therefore there will be inflation. Now, speaking of charging more for your services, let's talk about the labor market. Here we have a report from May 11th. Job openings soared a record high, 8.1 million. So if you look at the top chart in blue here, in blue we got unemployed people, and in red we have total job openings as of March 31st. So it's quarterly, that's the most recent we have here. What you notice is that there are plenty of job openings for the unemployed people here. I'm not saying every single American could get a job, but there are a lot of unfilled jobs right now. So now we have another big brain government idea, reemployment bonus plans. So the idea would be to give people more money as an incentive to go back to work. I just can't wait to see what they'll come out with next, guys. This is just amazing to me. At what point do they start to realize that if they just leave the free market untouched, you might have better result than what's going on right now? So you're having labor shortages for jobs that really used to be pretty easy to fill. And some restaurants are beginning to automate the process. Here is an article here. You can see they're automating it using this little machine here to bring food out. Now, I don't know if this is going to catch on, but it shows you what they're having to resort to. So I think stagflation is here. I think we're in the early stages. Basically what's happening is we're entering a recession. We're going to be producing less. Now on paper, with all the inflation going on, it may look like sales are up. Yeah, in dollar amounts, in nominal dollar amounts, sales are going to go up. Everything's up, up, up. But, the fact is we're producing fewer goods. We're performing fewer services. That is an economy. The money is just a medium of exchange. When it comes down to it, the size of an economy is dictated by the amount of goods and services you produce and the value of those goods and services. Now, the problem for the Federal Reserve is that they back themselves into a corner. How do you typically stimulate the economy in a recession? Well, you typically lower interest rates. Okay, they're already at zero, can't go any lower. What else can you do? Well, you can print money, you can give out stimulus checks. Okay, well, we've already done that, and that's led to an inflation problem, which is, one of the causes of the recession. So they can't really print their way out of this one either. The problem for the Federal Reserve, as I see it, is they become a political entity. They are part of the administration in the White House. It's very clear if you watch what they say. You see Jay Powell, you see Janet Yellen. They say the same things. They use the same buzzwords a lot of times. They are following the same script. They are both denying inflation is a problem at all. And the media has really become state-sponsored media. We have big government media right now. And so the media is really painting Jay Powell and Janet Yellen as the money saviors. They are the money gods. Anytime we have any roughness in the economy or the market, we turn to them. They will resolve all of our problems. The problem for the Federal Reserve is that nothing they do really helps the average American. Think about it. They're pricing people out of the housing market. They keep printing money, which makes the value of assets go up like stock, which does nothing for lower income families. Regardless of what they say they're doing, they're not helping the middle class. Now, there is a theory. Now, I'm an academic, so I read all the textbooks, I had all these classes. Yes, the theory with the Federal Reserve is that when they lower rates and when they supply more capital to banks, the banks can then use that money to loan it out to entrepreneurs to start businesses and to generate more economic activity. The problem is that's not really what happens. When the Fed lowers rates, all the corporations borrow more money and buy their own shares back, which increases the value of stocks. But it doesn't really do anything for the employment situation, does it? When the Fed gives money to banks, the banks don't actually loan it out to ordinary people. Maybe some of them, if they had good credit scores, they have a good business plan. But by and large, the banks use the money to buy their own stock and to invest in other stocks as well, thereby increasing the value of public companies. The Fed knows this, yet they continue to do it. Alright guys, so here are my investing takeaways from the news this week. Number one, regarding Bitcoin, is just another reason to stay away from Bitcoin in my mind. I outlined my thoughts on Bitcoin in a video recently. But clearly, Tesla not accepting payment anymore via Bitcoin is not a positive development. Second takeaway is the housing market. Based on the home builder compared to home buyer sentiment, we could see a decline in home prices as soon as 6 to 9 months from now. So just something to keep an eye on if you're a home buyer. And finally, yes, all signs point towards stagflation. I really kind of wonder if the federal government is doing it on purpose, because you think about all of their policies, add them together, it's kind of a perfect recipe. Raise the taxes, offer more generous unemployment, eviction moratorium forever, and of course the Fed chipping in, printing money like there's no tomorrow. So we could see higher wages, which force businesses to raise their prices. Given the raise in prices, a lot of people are going to choose to buy fewer goods and services. Now, you as an investor, you need to think about which goods and services are going to be most affected. Now, common sense would say discretionary goods. Things you don't need to buy, but you like to buy, that's what you're going to cut back on first. But you also have to consider the degree of labor intensity in the industry. Yes, labor prices are probably going up, wages are going up. That hurts some industries more than others. You gotta think about which industries those would be. But those are my takeaways. Let me know what you guys think in the comments below. Thank you so much for watching.